Okay, so thank you so much for joining through. This is Samuel Ivanda of Achievers Professional Trainers. And basically this evening, what I wanted to teach you is around accounting for non-for-profit making organizations. If you remember, in the previous classes, we've been looking more around how to prepare financial statements generally, and most of what we've been looking at is has mainly been around the private sector. So we just want to trace ourselves. We also looked at business structures, and I think we looked at, especially in the last class, we looked at business structures and we looked at sole proprietorship. We also looked at partnerships as well. We also looked at public companies, just a basic understanding of exactly what we do, especially when we are preparing financial statements for some of them. Now, our next topics will be around going now into detail. We are going to study how, let's say, non-for-profit prepare their financial statements. We shall go ahead to also study and see how let's say manufacturing companies also prepare their financial statements. We will also go also to look at, for example, areas around yes, partnerships, manufacturing. We shall also do look at some element of sole proprietorship, but now that will be, shall do single entry, okay, and so on. So for matters of this class, today we are looking at the accounting for non-for-profit making organizations. Now, non-for-profit, just like the way for-profit organizations also are interested in making sure that they prepare financial statements for their organizations. And this is to make sure that they are tracking in terms of financial performance of how the organizations are running, okay? So with that in mind, when we are learning this, basically our interest is to have you be able to distinguish how accounts for profit making are different from that of non-for-profit, and how also to prepare the non-for-profit making accounts, the financial statements, and then also being able to understand what are the source of incomes for the non-for-profit making organizations, okay? Now, when somebody says non-for-profit, some other people may call this non-government organizations. I think that's a common name, especially in Uganda, but basically the principle is the same, okay? Now, non-for-profit organizations, of course, we have to understand a few differences, and this come into the books of accounts that we keep. Now, one of the books of accounts we keep is a cash book, which we keep in the private sector or for profit. Now, in this area of non-for-profit, we call this a receipts and payments, okay? The same way just a cash book runs is the same way a receipts and payments also runs, okay? Now, when it comes to the profit or loss, profit and loss, the profit and loss is replaced by an income and expenditure account when it comes to accounting for not-for-profit. And also capital is also replaced by accumulated fund. So when somebody says accumulated fund in a non-for-profit, know that they are speaking about capital, okay? Of course, in the for-profit, capital is owner's contribution to the business. The other side, we are calling it accumulated funds. Now, for non-for-profit, where we have a net profit when it comes to the private for-profit businesses, here we call it, you can call it excess of income over expenditure, okay? That is your profit. Remember, these are non-for-profit, so they don't have anything to do with net profit. All they have is that they have excess of income over expenditure. And then they also have, of course, let's say, the net, if in case you have a net loss, then that will be regarded as excess of expenditure. over income. Okay. Now, you can also have, similar to this, you can have terms like surplus and deficit. Okay. Where, for example, there is excess of income over expenditure. Some other literature may call it a surplus. And then where we have excess of expenditure over income, other literatures may call this, of course, may call this deficit. So let's proceed. So when it comes to the records that you'll expect, now, when it comes to the receipts and payments account, remember we've said this is our cash book, okay? This is a version of our cash book when it comes to non-for-profit. So in here, the receipts and payments summarizes cash and bank transactions for the period, okay? An amount of money that has come through and an amount of money that has been paid out is recorded within your receipts and payments account. But in the same way, just like the way we have the cash book, a receipts and payments account will always have an opening balance. And this opening balance is just like the way your bank statement is. Every time you join, you're getting to a new financial period, your bank statement has a beginning balance, maybe the amount of money that you've started with at the start of the month. So it's the same thing also with the receipts and payments. It always have a balance brought down, okay? Now, when it comes to receipts and payments, we don't have, like, let's say, we don't have a breakdown in terms of, let's say, maybe single column or two column. A receipts and payments is just a single column, okay? So we combine cash and bank into a single column, okay? That is what you basically find. So we'll have the opening balance, then we'll have the receipts for the period, then we'll have the payments for the period, and then we shall have a closing balance. Of course, the closing balance is like the net effect of what has happened during the period, okay? Vis-a-vis the opening balance that we just had. So we shall see how this exactly works. Now, we also say that profit and loss is replaced by the income and expenditure. Now, from the word income and expenditure, you expect to find that your income and expenditure will have incomes, okay? Now, NGOs have different sources of incomes. And this could be, let's say, donations. Donations, by donations, I mean maybe certain kind of people, organizations may donate to this non-for-profit, okay, in terms of charity contributions. But we could also have, for example, subscriptions. Now, non-for-profit can also be sort of like an association. And associations have members that subscribe to those associations. Now, those members may agree to contribute a given amount of money towards, say, towards the non-for-profit, okay? Just like the way you contribute money to ISPOW. Now, ISPOW is a nanny, okay, it's for it, it's more of government. But if, for example, you contribute some money to, let's say, Rotaract or Rotary, okay, that can be a source of income to them, okay? Now, we can also have cases of, let's say, fundraising. Non-for-profit may also undertake fundraising drives to help them try to generate some revenue. Now, in that case, that fundraising amount, the fundraising returns are also part of the revenue. In addition to that, non-for-profit may also go ahead to do certain kind of businesses, okay? Now, this non-for-profit can also run certain kind of ventures. And the reason why they, of course, they run these ventures is to make sure that they're also gaining some amount of money to help them to be sustainable. So you may find, for example, a non-for-profit either has a hospital, it could either have a restaurant, it could either have a bar, okay? It could either have a saloon, whatever it might be, okay? So those could be the source. Of course, then the expenses are the general one. It can be, let's say, it could be rent, it can be salaries, it can be publicity expenses, it can be, let's say, staff costs, meals, okay? They can be many things that you can think about when it comes to expenses, just like the way we have in the private sector, okay? So the income and expenditure tries to record those different costs and incomes. Now, similar to that, since I've said that these organizations may also run certain kind of businesses, this is where something called the bar trading account might come through, okay? So the bar is just one element, but this may also be a restaurant's trading account, or it can also be maybe a hospital. If it's a private hospital paid account, it can be that case. It can also definitely also be a school, okay? Just like we are saying that these, though they are non-for-profit, they can decide to run some profit ventures, okay? They can decide to run some profit ventures. And the reason why they run some profit ventures is definitely to make some money, because subscriptions may not be really enough for them to make some money. So that is why they may end up doing what? Doing some fundraising, and then also being able to engage in business ventures like a bar, okay? Now, with that in mind, with us knowing that if any non-for-profit is running a profit business for those reasons, then what we do is we draw up a separate trading account for them, okay? We draw up a separate trading account for them. Now, the trading account looks very similar, just like the way you know how a trading account for any private organization might look at. Definitely, of course, it will include sales. It will include, let's say, if we have maybe cost of sales, maybe we have purchases, opening stock, at closing stock, gross profit, okay? And even we also go ahead to look at operating expenses in order to determine the profit we've made from that business. So what we do basically is the profit that we get from this trading account that we've drawn separately for the business, we transfer it to the other account as an income, okay? So that is why when you come to your income and expenditure, one of the things you will see is profit from, let's say, from the bar, or maybe profit from the school, or profit from the hospital, whatever it is, okay? Yeah. Yeah, so we'll see how that exactly happens. We've already spoken about accumulated fund, and we say that this is the capital when it comes to non-for-profit. And here we are saying that there are cases where, of course, in question, they may not give you the accumulated fund, okay? And in this case, to arrive that accumulated fund, you may need to prepare what we call a statement of affairs. Now, a statement of affairs looks a bit similar to a statement of financial position, but for it's basically just used to compute the accumulated fund, which is the same thing as assets less liabilities, just like the way capital is. If you remember the accounting equation, that when we are computing when we are computing capital, we do assets minus liabilities. Okay, so we shall see how a statement of affairs looks like, but it's just a list of assets and liabilities being subtracted together to determine the accumulated fund. Then we have the balance sheet, which is the statement of financial position. Now, balance sheet, I know you now have ideas of how to really prepare this balance sheet, but even when it comes for profit, it's the same kind of thing. We also prepare a balance sheet, and the balance sheet is a comprehensive one. It takes into consideration also, things to do with the bar trading. In case we have, let's say, a bar trading account, then would also, okay, in case we have, let's say, a bar, would also include all its items. That's single balance sheet. For balance sheets, we don't separate them. Like we have maybe one for the bar, and then we have one for the non-for-profit. We do a single balance sheet. We shall see how that happens exactly. Now, similar to non-for-profit is what we call subscriptions. Like I said, members to the non-for-profit may decide to contribute certain amounts of money to this for-profit, okay? And this certain amount of money may be, let's say, maybe annually, okay? Or we could have what we call life subscriptions, okay? Now, okay, those that are, let's say, annually or monthly, those you can call them ordinary subscriptions, basically the subscriptions that relate to, let's say, a year. Now, life subscriptions usually take a little longer, and this could be, let's say, 10 years, okay? This can be, let's say, 10 years. So meaning that somebody goes ahead to contribute some amount of money towards that non-for-profit, and that is to cater for a period of, let's say, 10 years. Now, every year they recognize part of that money within the subscription account. We shall be able to see. Now, when it's life subscription, for example, I'll give you an example. If I contribute maybe my annual amount that I should pay to, let's say, to Rotary is, let's say, every year it's 1 million. Now, I may decide to contribute 10 million for 10 years. So every year they will be recognizing at least 1 million of my life subscription, okay? So we shall see how all that happens when we get to the calculations. Now, just for you to know, when it comes to accounting treatment for subscriptions, now subscriptions are incomes, okay? Subscriptions are incomes. Like we've said, it's one of the key incomes when it comes to non-for-profit. Now, how do we treat subscriptions? Now, because these organizations run in a way that members contribute, there are cases when we have things like subscriptions due, okay? Subscriptions received in advance. Like I said, we can have people that can go ahead to, let's say, pay in advance. We can also have where we have life subscriptions. Now, here we are saying that if at all subscriptions are in arrears or are due, then we record this as current assets. Why? These subscriptions were supposed to be received by the company, okay, by the non-for-profit, but in this case, the members didn't pay. So we expect them to pay, okay? And that is why we recognize it as what? As a current asset. Just like the way we saw when it came to income, accrued income, okay? Remember the period has passed. Maybe your subscription was supposed to be for 2020 and the 2020 has ended. Okay. Now, in that case, that subscription is recorded as subscription in arrears within the statement of financial position as current assets. We also have cases where some members, maybe because they really have enough, or they just basically want to make sure that they are paying in advance. We have such cases. So in this case, that will be like a liability, okay? Their contribution in advance will be a liability to us. And since it's a liability to us, that would mean that we record it, of course, under our liabilities, the statement of financial position, okay? Now, of course, depending on, let's say, the amounts as well, and also depending on how long the subscription that we are paid in advance will be recognized. There are cases where somebody can actually pay even in 5 years in advance, okay? Now, the portion that is recorded under current liabilities is only those subscriptions that relate to the period that is within 12 months, okay? Any subscriptions that cascade beyond the 12 months is, of course, recorded under liabilities, under long-term liabilities, okay? I think you now know how to distinguish between current and long-term liabilities, just like the way we have current and non-current assets. It's the aspect of 12 months. Anything that will exist beyond the 12 months is recorded under long-term, okay, for liabilities, and it is for assets, it's called under non-current assets. So proceed. So like I said, okay, subscriptions are taken as incomes in the year, okay? Now, in case, of course, when we are drawing up our subscription account, for us to recognize each of these items, remember, these are very common items for most of the companies, of most of the non-for-profit. So we draw up our subscription account, as you can see. Remember, they told us that subscription in arrears are recorded as current assets. So you remember, current assets have a normal debit balance. So that is why you're seeing them on this side. And if we have cases, for example, of any subscriptions accrued, which are liabilities, they are recorded in the subscription account on the credit side, because liabilities have a normal, credit balance, okay? In case we have any subscriptions that are contributed, any cash and bank that is received in the period, it's, of course, as we debit our cash and bank or our receipts and payments account for non-for-profit, we now come and credit. Remember, subscriptions have a normal credit balance, so that is why we have this, okay? And then later on, we can be able to balance off, okay? Now, in most cases, if we have subscriptions in arrears, here we shall have the balance brought down, and then our balance carried down will appear on this other side, okay? Remember, these are assets. Assets have a normal debit balance, and of course, if it's a carried down, you always find it on the credit side. The same thing also happens with the accrued. As its balance brought forward is this side, its balance carried down is recorded on the opposite side, okay? So yours is, you can basically understand how to record this, let's say the balance brought forward, then you know that the carried down is recorded. Remember, if we have a carried down on this side, it means the balance brought down will be on this side. I guess you now know, how to, let's say, balance off different ledger accounts. So that is the principle of how we handle our different subscription accounts. Now, so we have an example here have an example here. So this example, maybe just to expand a little. So this example is saying that the following information is taken from the books of Mokono Rugby Club. Subscriptions received in advance for the year ended is 1 million. Subscriptions that were due, okay? Subscriptions that were due at the end of 31st December 2003 were 100,000. By due means those that had not yet been paid, okay? Then they're also telling us that subscriptions that were received in advance for the following year commencing 1st January 2004 amounted to 300,000. So they are asking us to calculate or to determine the amount of subscriptions to be taken as income for the year, okay? Remember what happens with the accrual concept. If you remember the accrual concept, we record only subscriptions that relate to that financial year, not basically subscriptions that have been received, okay? If there is any subscription that does not relate to this financial year, even if we have received it, we then don't have to record it, okay? We don't have to record such subscriptions. Now, from somebody's understanding, you can be able to, of course, to calculate this manually, even without drawing up an account. But the principle is, if these are the subscriptions that were received during there, remember we received 1 million, okay? And they're telling us that we had some subscriptions. Remember, this 1 million is our cash and bank, okay? This is our cash and bank that we have received. During that time, they are also telling us that subscriptions that were due at the end of the year is 100,000. So it means this 100,000, even if it was not received during the year, this 100,000 is also part of the subscriptions we should recognize as income, okay? In that period, okay? Remember, when we're recognizing income, it is either received or not received. But as long as it's attributed to that period, then we should go ahead to recognize it. Now, they are also telling us that we have some subscriptions that are received in advance, okay? So part of, let's say, the 1 million that we see here of the subscriptions that we received during the financial year ending this period, we have part of it of 300 that relates to the next financial year, okay? So somebody can, let's say the 1 million, add the 100,000, okay? And then maybe less 300,000 to be able to determine the subscriptions that is to be taken to the income and expenditure as income for the year. Now, this question is expecting us to use this idea, okay? Is expecting us to use this kind of information. So for it, what it is telling us is subscriptions that were received in the year, the 1 million is actually the cash and bank. So you come and put here cash and bank, you put your, let's say, 1 million, okay? Subscriptions that are due at the end of the year, which is your carried down. Remember, we don't have any subscriptions in areas that we are beginning with. So this will be 0, okay? So as this is 0, we shall record 100,000 this side, because those are the remember, the carried down is subscriptions at the end of the financial year, which is 100,000. Then subscriptions received in advance, okay? Subscriptions received in advance. These are subscriptions that relate to the next period, okay? Which, remember, we said that this should be recorded as liabilities. Then we also come and record them accordingly, okay? we come and record them accordingly. So let's just draw up our account for us to appreciate how that will exactly be. So I'll call this subscription account. I have my debit, and then I have my credit. Okay. Yeah. So remember, they told us that any subscription that is received in advance here, okay, let's just look at what we have so maybe you can easily relate. So from our question here, we have subscriptions received during the year. So what they told us here, that any subscriptions that are received through cash and bank should be credited. Okay, so I'm going to credit this 1 million. Okay, so I'll come here and I say cash and bank, or cash or bank. I record 1 million. Okay, remember, it's the same thing. Subscriptions are income. Okay, and what happens with incomes, as we debit our cash and bank or our receipts and payments account, we come and credit our subscription account. Okay, so that is why I'm crediting it right here. Now remember, they are telling us that subscriptions that were due at the end of 31st December 2003 were 100,000. Now subscriptions that are due are assets. Now if we have subscriptions that are due, okay, subscriptions that are due means that we shall have a debit balance, and then this is at the start of the financial period. Okay, then when we are closing up our books, we shall have the figure right here on the credit side, and then in the next period it will be a balance brought down on this other side. Okay, so this 100,000 within my accounts, I'm not going to record it on the debit side because it's not an opening balance, it's actually closing balance. Okay, so I'll record it on the credit side. So what I'll do, I'll come here and say subscriptions due. Remember, it is a carried down because it's at the end of the period. So I'll put the 100,000. Okay. If I had the beginning subscriptions are due at the start of the financial period, I would record it here. But in this case, I'll record only this portion because this other side, it is 0, even if I don't include it there. So when I come to this, we have subscriptions that are received in advance during the period. We have 300,000. Okay, and remember they are saying for the following year commencing on 1st January 2004. So these relate to the next financial period. Okay. Now, we don't have any subscriptions that were in advance at the start of the following year, because if we had any subscriptions that were received in advance at the start of the financial year, then for them, they will have a balance brought down on the credit side because they will be liabilities. Remember, when people pay in advance, it's more of a liability to us, okay? Because it's only when the financial period has ended that those subscriptions will be recognized. So unless the financial period has ended, then it will continue to be more of a liability. So since these are subscriptions at the end of the financial year, the balance will be written here. Subscriptions. Subscriptions in advance. We have this. This is a carried down. Remember, in the next financial year of 2004, it will be brought down on the credit side as a liability. So that is why we record it on this side. So this will be 300. This will be 300,000. Okay. So once we've input, in case they had given us that subscriptions in advance at the start of the financial year, would record it here. But since we don't have it, I will not record. Okay. And I've also not recorded if any subscriptions that was due at the start of the year because we didn't get it. So all the information we got was the subscriptions that we received in the period. We also got subscriptions that were due at the end of the financial year. Then what we have also gotten are subscriptions that were received in advance that relate to the next financial period. Okay. So what I'll do then, I'll now balance off the respective sides. Okay. So I'm going to balance off now. This side we have 1.1, which is the highest side. So we have 1.1. This will be the same total that we expect to be here. But since we have 300,000, it means now we shall have a balancing figure. Now this balancing figure is what is going to your income and expenditure account. Is the amount that goes to your income and expenditure account, which will be basically 1.1 minus 300,000 gives you 800,000. Okay, it gives you 800,000. So 800,000 is the amount of money that is recorded under your income and expenditure, and it is your balancing figure right here. Okay, so let's just go back to our question. Remember, they have given us subscriptions that we are received in advance, 100,000. Okay, 1 million. Okay, subscriptions received during there is 1 million. Subscriptions that are due at the end of 31st December 2003 is 100,000. And then subscriptions that we are received in advance, it's 300,000. Like I said at first, instead of drawing up the ledger, you can basically, if you understand what this information means, you can calculate it from here. And like I said, get this 100,000 that was received in there, add subscriptions that relate to the next financial year, because even if they have been not received, but they relate to this financial year, okay? So add the 100,000 right on it. And then anything that relates to the next financial year, remove it, okay? So add the 1 million that was received, add the 100,000 that was not received, but still relates to this financial year, and less the 300,000, you still come to 800,000, which we've just gotten through the ledger accounts. Okay. Yeah. When you try out more questions, these things will become more easier. So this is how the account would look like, and that's how the solution looks like. We had already done this within the notes, okay, for you. So I hope that helps you. And then we have the life subscription, like which I've talked about, where you can have cases where, okay, some non-for-profit have a category of life subscription. Now, in this case, when it comes to life subscription, this life subscription can be paid, let's say, once, okay? It can be paid once, maybe for the next, let's say, for the next 10 years. But we are saying, if we receive that life subscription, what we do is we debit receipts and payments and then credit the life subscription account, okay? Now, life subscription account is more of a liability to us. Reason why we call it a liability to us is, remember, we've not yet got into the financial period, okay? Like, this person is paying in advance for the rest of their life, so it's more of a liability to us. So what we are saying that every year, for us to reduce on the liability, if somebody has paid a life subscription, let's say for the next 10 years, we shall divide that life subscription divided by 10, and we shall get an amount of money that we should recognize in the income and expenditure every year. So if, for example, they have paid 10 million and they have paid this for, let's say, for the next 10 million for the next 10 years. So we have 1 million that is be recognized every year. So when we are doing the recognizing, we are saying that debit the life subscription. Remember, when we bring in life subscription, we credit it because it's more of a liability, okay? Now, in this case, the liability is decreasing, so we debit it, and then we shall now recognize the 1 million within our income and expenditure, only what relates to that financial year, okay? And that's why they are saying the credit balance in the life subscription account is the long-term liability of the club account. Remember, most of this amount relates to a period that is not less than 12 months. So that's why we keep it as a liability. So we have a case here. We have a question here around the whole receipts. Okay, this is a receipts and payments. I think you now remember what a receipts and payments account means. Remember, we said the receipts and payments account is more of the cash book, okay? So these are the figures that have been provided. Just to arrange them a little, okay? So our receipts and payments looks like that. So we have the balance brought down figure is 2.5. We have the bar wages, which is 1.7. Okay. We have the stationery. We have the completion expenses. We have the repairs. We have the raffle expenses, payments to bar, creditors. We have transport costs, electricity, and so on. Then we have a balance carried down. This will be like the amount of money that we have at the bank, if we're told we only work with the bank, okay? And then we have, of course, our respective totals on each of the sides. So this is basically summarizing. And remember, we have the receipts, we have donations, we have receipts from debtors, we have raffle receipts, we have competition receipts, we have subscriptions, and so on. Now, when you move down, we are also saying that this information is also available, okay? Now, the information that is available, we have bar stock costs, okay? We have bar debtors, we have bar wages in arrears, we also have ordinary subscriptions received in advance, we have bar creditors, and so on. Now, I think you're seeing the word bar coming up so much in here, but this word bar is basically relating to the for-profit business that this non-for-profit is running. Okay, remember, it's a mobs football club, but they own a bar. So that is why we are seeing bar stock, bar debtors, bar wages, bar creditors, and so on. And then they are also going ahead to tell us that the club had the following fixed assets. So they have buildings, they have equipment, then they have, we also have additional information where they are saying repairs of an item of development expenditure should be capitalized. Okay. We have cases of, they are telling us that half of the, okay, they're saying the company depreciates all its fixed assets by 10% on costs, with the exception of equipment, which is depreciated at 5% on reducing balance. I trust right now you know what this means. Then they are telling us that half of the electricity expense relates to the bar. Now, when we are drawing up our bar trading account, we only record only what relates to the bar. Okay, we only record what relates to the bar. And then when we come to the income and expenditure, we also record only what relates to. We'll go ahead to record only what relates to the general non-for-profit. Okay, so that is why even when it comes to such expenses, they have gone ahead to break this down one by one. Okay, so they have also telling us that 10% of the subscriptions received is life subscription. 10% of the subscription received is life subscription, which should be credited systematically to revenue account over a period of 10 years. Okay, over a period of 10 years. So this should be able to give you a good understanding of the life subscription that we just talked about. So the first requirement, they are requiring us to prepare, they want us to determine the accumulated fund as of 1st January 2003. They also want us to also go ahead to prepare the bar trading account as at 31st December 2003. Then they also want us to prepare the income and expenditure account. They want us to prepare the income and expenditure account. And then they also want us to prepare a balance sheet at the close of the financial year. Okay. They want us to prepare a balance sheet at the close of the financial year. Now, remember the accumulated fund, we say that that is capital. Accumulated fund is capital. Okay. And the way we calculate capital is we go ahead to look at the assets and less our liabilities. Okay, assets less liabilities. So let's now see how to go ahead to calculate this. I'll try to, let me just try to see if maybe I can share this so you can follow through. Let me just try to see how I can share these notes with you so you can follow through the question. So I'm sharing this within the chat box. Okay. Yeah, I'm sharing this in the chat box. Make sure that you download it. Yes, if I can share this also on WhatsApp, maybe for you to basically also get it right there. So when you download, just try to first go through the question and understand. Make sure you don't look at the solution before we can attempt it, so that you don't get confused, because I want to guide you accordingly. Okay. Okay. So I've shared also a copy on WhatsApp. For you to see. So let me just give you about 3 minutes just to go through and be able to download it, and then we start. Just use the next few minutes to calculate it. Okay, all right. I think you've gotten the question. So let's see how we can start looking at the question just shortly. And then once we're done with the question, we shall end the session. So the question is requiring us to first calculate our accumulated fund. Okay. First, the question is first asking us to calculate our accumulated fund. Like I said, accumulated fund is looking at the difference between your assets and your liabilities. Okay. So the heading is very important. Remember, this is MOBS. This is MOBS Football Club. So this is its statement of affairs. So they have not asked us to do a statement of affairs, but the fact that the fact that they have asked us accumulated fund, we should draw up our statement of affairs. It's the one we use to calculate our accumulated fund. It is just similar to a balance sheet, okay? So just for you to note. So this is as at, remember the start of the financial year, which is first, it is 1st Jan 2003. 1st Jan 2003. 4 zeros. Okay. So once we have our heading right there, have our heading right there. I can do this. Okay, no, just leave it the way it is here anyway. Okay, so this, remember, we are now going to look at the assets and then liabilities. So we shall start with assets. And under assets, we have our fixed assets, which can also be called our non-current assets. Okay. So ours is to go and look for assets as at the start of the financial period. Okay. So when you go back to our question, there are different assets that have been provided. The non-current asset, you can see, they're saying the club had the following fixed assets as at 1st January 2003. So they're telling us that buildings was at 2 million, was at 20 million, sorry. And then we had equipment, which was at 600,000. So we basically have just to pick this and transfer it the other side, okay? So that is what we have. I can just remove this so it doesn't disturb me. So these are our assets that we have at the start of 2003. Now, ours is to see, do we have, of course, any other assets? According to the information they have provided to us, these are the only non-current assets. So we can find their total. We can say total of this, maybe create a different column here. This gives us 26. Then we shall go ahead to look at the current assets. Shall look at our current assets. Now, when you look at the information that has been provided, our current assets now, the current assets are mostly these that we have here. Okay, remember they have given us figures as at 1st January 2003. Okay, so these are some of the current assets we have: the bus stock, the debtors, the wages. Okay, now bus stock and debtors, these ones we can go ahead to include it. Okay. First include this there. my battery is warning, but we'll see how we can survive. So that is one of our current assets. As you can see, I'm taking figures as I've been given two figures. First January 2003 and then figures at 31st December 2003. Now mine is to make sure if I'm doing the statement of affairs, I should use these figures, the beginning figures, okay? Those are the ones that relate to the start of the year, and those are the ones I should use for the statement of affairs, okay? Then I'll pick the bad debtors also. Remember, debtors are also current assets. If you have to remember very well, the bad debtors are current assets. So I'll just pick this figure here and include it there. Okay, that is the second current asset. Mine is to go back and see, do I have any other assets? Bar wages in arrears, these are not assets. These are actually liabilities. Why they are liabilities? The word arrears means that they are not paid. So if these are wages, it means actually we didn't pay, we haven't paid. So these are liabilities. So I'll include these when I get to liabilities. Ordinary subscriptions received in advance, these are also liabilities. Back creditors, of course, those are direct liabilities that you can easily figure out. Now, the other asset that I should be thinking about, 5 zeros. Okay, sorry, trying to get here something. So the other asset that I should be looking at is this balance, okay? The balance brought down, for my receipts and payments. This is my cash and bank balance, okay? Remember, this is like a cash book. So even the balance on your bank account is part of your assets, okay? So I'll just pick this 2. Yeah. So that's my cash and bank. So I just write it here. This one, I'll just pick this figure here. I'll call this cash and bank, or you can call it receipts and payments, or cash or bank. Okay. So we have 2.5 right there. Yes, you can add a degree of precision if you need so. But that's what I'll work with. And let me just confirm that there's no degree of precision on my receipts and payments. Yes, the way you see the figures is the way they are. Okay. So mine is just look through, make sure I don't have any other assets. Yes, I don't have any other asset at the start. So once I have that, I'll now go ahead to total up my assets. Okay. I'll go to total up my assets. Total here. The total of this. Is 3.1. Okay. So when you total up the 26 plus this, you get your total assets. So we have 29 million right there. So I'll now go to my liabilities. Now my liabilities, I'll go back and look at still what I have here. Remember these bar areas, we said these are liabilities. So I'll start with these ones. Then ordinary subscriptions received in advance. These are also liabilities. Remember, these subscriptions relate to the next financial year, so they are liabilities to us. Okay, here I didn't. I'm not really using. Okay, I've started with the current liabilities. These are mostly current liabilities. I'll see if I have any non-current liability to record. Okay. So back creditors, these are also liabilities. Okay. Then I'll check and see if I have any other liability. Okay. Now I don't have any liability. Now, in case payments account here, okay? Now there are cases when instead of having an opening balance this other side as your balance brought down, you can get an opening balance to be on this side, okay? Now, in that case, that will be a bank overdraft, and you would consider it as part of your liabilities and not your assets, okay? That now, in this case, we don't have any liability coming from the receipts and payments. There's no bank overdraft. So that is what we basically do have. And so we shall go ahead to add them up. We shall go ahead to add them up. So total of this is 910. Okay. So remember our accumulated fund, which we said is assets minus liabilities. It will be 29,150,000 less our 910. Okay, which will give us 28,240. Okay, so this is what remember, this is what we are looking for. Okay, no matter where you write this amount, sorry, no matter where you write this amount, it's the same principle. It is the same principle. So that's how you calculate your accumulated funds at the start of the financial year. Okay. So very similar to that, they asked us to calculate our I think that was the bar trading account. Just a moment. They asked us to calculate a bar trading account. Like I said, depending on the business that the non-for-profit is engaging in, it will determine either this is called a bar trading account or it's called maybe a school trading account. Okay, so it's not like every non-for-profit will always have a bar trading account. So in this case, since they are running a bar, so we are going to draw up our trading account. We are going to draw up our bar trading account. Just like the way you know how a P&L looks like for private sector is what we shall do. And the reason why we draw up our bar trading account is to determine the profit that has come from the bar, okay? So we shall look at the revenues and then we shall look at the expenses. And of course, since we also have stock, we shall even look at the gross profit as well. So like that. So we shall go within here. Of course, it's a mobs football club's bar. Okay, so we can say bar trading account, and this is for the period. This is for the period ending 31st December 2003. Okay. So that is what we have. Okay. So since it's a bar trading account, we shall start looking at things to do with sales. Okay. Because we want to look at revenue and then expenses. So ours is to do the bar sales. And how do we get the bar sales? Is to go back to our question and see where are the bar sales. How can we locate the bar sales? When you look at our receipts and payments, we have, I think you can see, we have this is the balance, we have donations. Now we have receipts from debtors, 24 million. Okay. Then they're telling us raffle receipts, competition receipts, subscriptions. So this is what relates to the bar. This relates to the bar. Okay. Let's just look at the expenses, though we are not yet on the expenses. But as you can see, we have bar wages, then we have raffle expense. Okay, we have payments to bar creditors. So that is what relates there. Then we shall get down to here. So they have also gone ahead to give us some bar debtors at the start of the period and also at the end of the period. Okay. They have gone ahead to give us the bar debtors at the start of the period and the end of the period. Scroll down. So we don't see sales, okay? We don't see the bar sales. So all we see is money that was received from debtors, okay? Maybe this bar sales on credit. Okay. But they have also given us this information. And yours is to ask yourself, why have you been given this kind of information? Okay. So what we shall do for us to determine the sales, okay? Remember, just from just mere understanding, if you started with 400,000, okay, in debtors, and then you have over 24 million that you received from debtors during the period, okay? And then you have 340,000 that remained in outstanding from debtors. Means that part of this 24 million, because you only had 400,000 at the start, part of this 24 million relates to sales for the period, okay? Relates to the sales for the period. And then remember, this 340 are the debtors that remained outstanding. So what we are going to basically do, of course, you can do simple, you can analyze it from here, where you say that, okay, if I started with 400,000 in terms of, let's say, my debtors, if I received 24 million, definitely you remove this 400,000 that was outstanding at the start of the period, because these debtors relate to the previous period, okay? So you remove, let's say, the 400,000, okay? And then that would give you partly the sales, partly the amount of money that you received for the sales for the year, because you've removed the debtors that relate to the previous financial year, okay? But then they're also telling you that there's also 340 that remained outstanding. So these 340 are also sales that should also be recognized as well, okay? Even if you didn't receive money, they're also part of sales. So it will be basically 24 million, less the 400,000, and then add the 340 to get your sales, okay? But that might confuse you, and that is why you need to go and draw up your debtors account. So I'll have just a tab for working here. I'll call this my working. So I'm going to draw up what I'm going to call my debtors account. And remember, it is the one that's going to help me determine my sales, okay? So this is debtors account. Can call it BAT debtors account, like the way it is called, the BAT debtors account. So mine is to record the balance brought down and the balance carried down, okay? So my balance brought down is 400,000, balance carried down is 340. That is what I'll start with. So I'll come here and I say, this is 1st January 2003, okay? I'll call this my balance brought down, which is it is 400,000, sorry, okay? The balance brought down is 400,000, as we have seen here. Then I'll also record my 340, which is the balance carried down. This is 31st December 2003. I'll record. Now, just for you to know that I record my balance brought down on this side and record the balance carried down on this side, okay? So that is how we record these balances. I'll even put it down here. So, sorry, let me just sort this out. Doesn't look funny. So on this date, I have my balance, sorry. This is balance. This is balance carried down of 400,000. No, it is 340. 340,000. So the reason why I record it this way is because remember, debtors are assets. So they have a normal debit balance. So the balance brought down will be this side, the balance carried down will be this side, so that in the next financial year, this balance carried down is actually balance brought down. You get it? So that is the principle. Of course, this is debit. This is also credit. This side is credit, like this. So that is the first step that I'll do. Now, the next thing I'll do is receipts from debtors. Okay. Now, receipts from debtors. As you can see, we have 24 million. Now, how I record my receipts from debtors, remember, in the receipts and payments account, they have been debited because this receipts and payments account is like a cash account, okay? They have been debited because money is coming in. Now, debtors, if at all we are getting payments from debtors, it means that the debtors account is reducing, okay? And remember what we said when assets are reducing? We said that when assets are reducing, we credit them. So debtors account only increases when there are new debtors on board, okay? But it goes ahead to reduce when we receive payments from the debtors. So this receipt and payment that we have received from the debtors is supposed to be credited, okay? It's supposed to be credited. So what I'll come here and do, I'll come and credit these receipts and payments, which is worthy 24 million. So this is worth 24 million. So that I think you can get the principle there. Why I've credited this as I debit it in my receipts and payments, which is my cash book. Here I'm crediting them in the debtors account because my debtors are reducing, so I credit it here. So that's the first thing. So as you can see, I've tried to record anything around debtors, okay? The receipts from debtors, the different balances. Now, within this account, within the same account, remember, it's not only if we received 24 million during this period, it means, and we started with 400,000, it means that we had some new debtors for the period, okay? And those new debtors, of course, are supposed to be debited on the debit side because they increase our debtors, okay? Now, these debtors arise as a result of sales, okay? And that's why I'm saying we are going to use this debtors account to determine our sales, okay? So any increment in debtors that happened during the period was as a result of sales, okay? So because when you see we have an account here, we have 400,000, and then we have the total of this is over 24,340. So what I'll do, the balancing figure that I'll have this other side on my debit side will relate to the debtors that came through during that period, okay? And those are what I'll regard as my bar credit sales. The bar credit sales are the ones that came in to increase the debtors for us to be able to receive this 24 million plus, okay? So this is where the bar credit sales will be recorded because they increase our debtors. Now, in the question, they didn't give them to us, and the examiner does it intentionally not to give this amount because that is what they want you to determine. Just like the way we just did I think something to do with when we just looked at the subscriptions, okay? We're not given these subscriptions, the one that goes to the income and expenditure, and that's how we calculated it. So even right here, they will not give you this value. We shall look at this even more when we get to control accounts and see how control accounts work, okay? But that is the principle here. So for me to balance off this account, because I've put this and I've put this, for me to balance off this account to make sure that it has similar totals, which is the total of each side is 24. Okay, the total on the big side, which is the credit side, is 24. So I'll have the same total across through which is 24,340,000. So I'll have it here and there, okay? And this is just a total, just to indicate it's a total. So that is what I have. So now the difference, for me to make sure that I get the difference here between, to make sure that this side is balancing this side, is to determine the credit sales, which is the difference between 400,000 and the total of this side. So this is about 24 million minus 400,000, which gives me 23,940. So the 23,940, are actually our credit sales. The 23,940 is actually our credit sales. Okay. So try to follow through what I've just said to get that principle, that every time you're not given sales and you're given debtors values, you can be able to look at what you started with, look at any receipts from debtors, and see if you have any balances. Okay. In case we had any returns, we'll definitely also make sure that we come here. Returns also decrease the debtors. Just like the way payments decrease debtors, returns would also decrease so returns would be recorded on this side, okay? But we don't have those details. Only what we had was the balance brought down, the balance carried down, and then we had how much we received from the debtors. So we've been able to use this account to determine our credit sales, which is now 23,940,000. So the question, when you look at the question, it didn't give us any, it basically didn't give us any direct cash sales, okay? So it means that when we are going into our bar trading account, what we are basically going to use is the value that we've just gotten, which is our credit sales, okay? So when we come here under our sales value, the bar sales, we are going to use that value that we've just gotten, the 23,940. In case we had any more information about sales, maybe we'll go ahead to add them there, okay? So that is what would basically happen. And that's how we would get our 23,940,000. And then we now go ahead to, we shall go ahead to less our cost of sales. Less cost of sales, okay? I think you know this process. We are trying to first derive to our gross profit, okay? Now, when we go back to our question, remember cost of sales, we look at opening stock when we are drawing up our, when we are determining our cost of sales. Cost of sales is equal to opening stock plus purchases less closing stock, okay? Opening stock plus purchases less closing stock. Now, we have opening stock, okay? We have opening stock, and they have given it us here. Remember, they're saying bar stock at the start of the January 2003, it is at 250. So I'll have my opening stock, which is 250, okay? So this is what I'll have. I'll come here and say opening stock. Opening stock is, I'll first calculate it here in this column. So my opening stock is 250,000, okay? Then mine is to add the purchases. Mine is to add purchases, okay? I hope you remember how to calculate. Now, when I get to my question, you're going to see something here. When I get to my question, mine is to look for purchases. Now, purchases, I can either find them in the the receipts and payments account. Remember, purchases, you're buying, let's say, if you're dealing in a bar, maybe you're buying the beers and the drinks, okay? But now let me just try to see. Bar wages, stationery, completion expenses, repairs, raffle expenses, payment to bar creditors, transport costs, electricity, balance carried down. So basically, I don't see direct purchases that they were buying purchases, but something very similar that I see here is the payment to bar creditors. So this is what I have. So I have the payment to bar creditors, and then I also have, when we come here in this information, then I also have this information. I have the bar creditors balance brought down, okay? And then I also have the balance that is carried down, okay? Balance brought down and balance carried down. So just like the way I did for sales, okay? You use the creditors account to determine your purchases. Remember, purchases and creditors have a relationship. Creditors arise of us purchasing on credit, okay? So definitely, if you have your bar creditors, now from just seeing here, remember we started with our creditors at 650, but if in the period we've paid over 6 million to bar creditors, it means along the way, we actually purchased items on credit, and that is why we have gone ahead to pay over 6 million shillings, yet we started with only 650 that was outstanding at the start of the financial year, okay? So it means that if at all we have 204 that we also closed with, then in the middle there, we have what we are regarding to as credit purchases, okay? So what I'm going to do, I'm going to open up my creditors account, and I'm going to have this as opening balance, and then I'm going to have this as my closing balance, and then I'll make sure I record the bar creditors. Definitely the bar creditors, I'll record them on the debit side of the creditors account. Why? Because every time we make payments to bar creditors, it reduces our creditors. And creditors, once creditors reduce, those are liabilities decreasing. When liabilities decrease, we debit them, sorry, okay? So this is what I'm going to do. Under my working, I'm just going to copy this so that I don't have to struggle very much. I'll delete the figures so I don't confuse you. So I'm going to call this bar creditors account. The bar creditors account, okay? So it has also debit and credit. So for it, the balance brought down will be on this other side. Why? Creditors have a normal credit balance, okay? So what I'm going to do is bar creditors balance brought down, I'll record it on the credit side here. So just come and record the amount has gone this far, right there, like that, okay? So, and then this is my balance brought down. Let me just try to put it here so I include it here. So this is 1st January 2003, and you can call this balance brought down. Since you're already in a creditors account, you don't have to call it again creditors, okay? So I've basically been able to record my creditors at the start. So as I record my balance brought down right here, I'll come and record my carried down here, okay, for the period. Remember, as it's a carried down here in this financial, it will be a brought down in the next financial on the credit side to still meet the rule, okay? So at 31st December 2003, 31st December 2003, I'm going to have my balance carried down. My balance carried down. So my balance carried down is a 240. My balance carried down is 240. Okay. Okay. Right there. Now, I've been able to record my balance brought down. I've recorded my balance carried down. Now, the next thing I need to record, is the payment to back creditors. The next thing I need to record is the payment to back creditors. Now, like I said, if I have a creditors account, okay? If I have a creditors account, my back creditors, in case I make payments to them, since this has a normal debit balance, I'll debit any payments to those back creditors, okay? So that detail will be recorded right here, okay? Any payments to back creditors will be recorded within our debit side, okay? Let's try to record the amount here. So that is what we basically have, okay? So that is how you've recorded your things. So you just see whatever we've done with the debtors account, we've basically just interchanged how, because debtors and creditors work in opposite sides, okay? So right here, like we've seen, we have a balance brought down, we have a balance carried down, and then we have the payment to creditors. Now ours is to just check and see, do we have any other information that relates to creditors? Okay, we don't have any returns and so on. So that is all that we have. Even when it comes to the additional information here, there's nothing that relates to either creditors or purchases, okay? So what we shall do is balance off this account and determine what we shall call our credit purchases. So credit purchases would appear on the credit side of the creditors account. Why? They increase the creditors, okay? Every time you purchase on credit, it is increasing your creditors. So any credit purchases will definitely be on this other side, okay? And that is what basically we need to calculate. And that's why the examiner gave you all that information. It's the why they gave you this that table, the one that we just have. Sorry. It's the reason why they have given you this information. Every time they give you this beginning information and closing information, know that you're going to draw up tier accounts and be able to determine either credit purchases, either credit sales, and so on, okay? So in this case, means that let's just balance off. This is 6,240,000, okay? Basically 6,240,000, like that. So this is 6,240,000. Then my credit purchases is basically the difference between 6,240 and 650, okay? Which will be 6 that minus that, which gets me to 5,590,000, okay? 5,590,000. So those are basically my credit purchases. Those are basically my credit purchases. Now, if I look through the question and I don't see any other purchases that they are indicating, because if I found credit purchases, main is to see, do I have any cash purchases, okay? Now, if I had any cash purchases, I would still find them, let's say, in the receipts and payments, because that is where they would be best. So instead of having payment to back creditors, in case I have let's say purchases, cash purchases, they will also still be here independent. Okay, yeah. So in that case, I don't have, meaning that whatever I have gotten is what I'll record as purchases, the other side. So like that, huh? Remember, I'm calculating my cost of sales. Of course, you also know the adjustments of purchases. You must be knowing them right now. In case I have things like carriage inwards, I'll basically come and add them here. In case I had any purchase returns, I would definitely come and adjust them as well, okay? But I don't have them, okay? So since I don't have them, what I'll do is I'll less my closing stock or closing inventory, depending on the question. Some questions can call it inventory or stock, okay? So right here, we have our closing stock, which was given at 160, okay? So my closing stock is 160. So I'll come here and record it accordingly, okay? So mine is to add up, okay? This is less, sorry. This I'm lessing, so I'll just put a negative to it, okay? And then I'll get my cost of sales, which is the answer after adding this to this, lessing this, okay? Which is 5,680,000, okay? It is 5,680,000. Now, once I have that, I can go ahead to get my gross profit, okay? I can get my gross profit or gross loss, depending, but this time it's a profit, which is the 23 minus the 560, okay? Which gets me to 18,260,000. That is my gross profit. Now, remember, all that we are doing is for the bar. We have not tapped the whole nanny for profit, and we shall only tap the nanny for profit when we come to the income and expenditure account, okay? So right here, I'm now going to do my other operating expenses. So less operating expenses. Here we look at only operating expenses that relate to the bar, okay? Remember, we want to just determine how much profit we have gotten from the bar, okay? So let's just go back to our question and see what are some of the expenses we have and record them accordingly. So the information for the expenses, definitely we shall get it via additional information, but also from the receipts and payments, okay? So in here, we have bar wages, okay? Before I look at bar wages, let me see if there is anything. So we have bar wages, then we have stationery, okay? Now, unless they specify and say that stationery relates to the bar, then you take it to be for the whole nanny for profit, okay? And you don't include it within your bar trading account. Anything that relates to the bar will have the word bar. And in case maybe this is just a general expense, they will come in the additional information here and tell it to you. For example, we have this case where they are telling us that half of the electricity expenses relate to the bar, okay? Half of the electricity expenses relate to the bar, okay? One of the other things that may also happen, and as we shall see with other numbers, even as you go through, is it comes with depreciation. They can give you some assets that belong to the bar, okay? Now, in this case, the assets they have given us all belong to the club as general, okay? So they have not given us some assets that belong to the bar. In case they give us independent assets that belong to the bar, then those assets would definitely do what? Would definitely depreciate them, and the respective depreciation for those assets would be recorded within the expenses of the bar trading account, okay? Now, in this case, the only expenses that I'm seeing that relate to the bar is the bar wages, okay? Remember all these repairs, raffle expenses, and so on, they have not told us that they relate to the bar. It's only electricity, by the way, okay? It's only electricity that they have told us that half of the electricity expense relates to the bar. So for electricity, as you can see, within our account here, electricity was 1.2, and you didn't have any electricity outstanding or electricity paid in advance, okay? So everything that was paid in the receipts and payments is electricity for the year. So part of this 1.2, we are saying, we are being told that a half of it relates to the bar. So what I'm going to basically do is, when I come to my operating expenses here, I'll first record electricity, which comes very easily. So my electricity, I'll record, okay, let me just first record them under this column, and then I'll record the total, this other side. So electricity partly 600,000, which is a 1.2 divided by 2, okay? Now, the other next expense is wages, but wages have some dynamics, just like the way we saw for debtors, okay? Wages, we have bar wages that have been paid in the receipts and payments. Then we also have bar wages that are in arrears at the start of the period, and when we also have bar wages in arrears at the end of the financial period, okay? Now, whenever you have expenses positioned in that way, you cannot just take the bar wages up here, because these are the bar wages that were paid through cash. And remember, with the accrual concept, we don't only recognize expenses that were paid in cash, but also expenses that relate to the period that were outstanding or that were in arrears. These should also be recognized, okay? So that would mean that I'm going to get, for example, I'm going to draw up a bar wages account. You're going to see how it will look like. If you've understood the way we've done the creditors and debtors account, then it's something that should come very easier for you, okay? So I'll draw up my bar wages account. So this is a bar wages account, okay? This is a bar wages account. So in the same way, I'm going to have balance brought down and balance carried down. Now, remember, bar wages, okay, wages themselves are expenses, okay? And expenses have a normal debit balance. But similar to expenses, in this case, we have what we are regarding as bar wages in arrears. Now, bar wages in arrears are liabilities, okay? Bar wages in arrears are liabilities. Why they are liabilities is if we have not paid some wages at a given point in time within the financial period, then means that we have to pay these at one point in time. So they are liabilities. And remember, liabilities have a normal credit balance, sorry. So when I go to the bar wages account, I'm going to record these arrears on the credit side, the balance brought down. Why? Because liabilities have a normal credit balance, okay? So when I come here, when I come here, sorry, this is 140. I'll bring it nearer here. This is my okay. These are bar wages in arrears, and I'll call it balance brought down. Okay. So then I'll have the other right here. Okay. The closing figure. Remember, as it is closing, on the credit side, on the debit side, it's an opening credit when it comes to the other side. So I've put it right here, my balance brought down. So my bar wages in arrears carried down, I'll record the figure here. Okay. You will master this when you try to look at several numbers that are set in this way. Okay. Now these things are so much common when it comes to single entry transactions. Okay, where you don't get, there are no systems to provide you with some of these figures. So the examiner also uses the opportunity to hide some of these figures. Okay, so I've written my beginning value of arrears and also closing value of arrears respectively. And I believe you've understood why I have recorded them that way. So the next thing that I'll do is to record these receipts and payments of bar wages. Okay, the bar wages, receipts and payments. So these are the wages that were paid during the year. These are the wages that were paid during the year. Now, every time we pay wages, it increases our wages account. Okay. So any payment for wages is debited. So I'll come here. Sorry. Put it the different and payments. This is coming from the receipts and payments, or the bar wages that were paid in the period, which we have gotten to be 1.7. Okay, or you can call it bank, depending. Okay, or cash or bank. Now, and that is the only provided wages. Okay. I want All right, sorry, I was a bit kicked out, but I'm back here. 30. wages for the period, which is which should now be the 1.8 minus the 140, okay, which is the 1690. Okay, so this will be my trading account. This is the amount of money that I will record there. Okay, 1.4, this is what I would record there. So that is the reason why I've drawn up this account. Okay, so it's important for you to learn how to juggle out with information that is provided like this, especially when it comes to such numbers, or you can also find such cases when it comes to preparing the P&L. For you're getting right here, you get to the other side. So like 690, okay? Only expenses in our trading account. So I'll just get the total of this. Just get this, which is 2290. Okay. So this is my total expenses. This is my total expenses. Main is now doing net profit, okay? The bad trading. Net will be the 18, which gets me to of the graph. Hello. Okay. That is what I wanted to stress. So the 15970 is what we've gotten, and goes to So the income and expenditure account is the general account. Okay, is the general account at for the whole non-for-profit. So it is so similar to the P&L, but you know, for non-for-profit, basically we don't have now sales. We've already done that within the bad trading account, and that's why we do a separate account. So in this case, we're just going to have incomes and expenses. We are going to have incomes and expenses, just a list of them, and then we're able to add those accordingly. So I'll start with my incomes. Okay, I'll start with my incomes. Now mine is to now just go back and see within my information that I have, what are some of my incomes. Okay, so incomes, I'll basically get them from here. Okay, now donations is one of the incomes. Okay, now receipts from debtors, receipts from debtors, I've already taken that into consideration, and I'm going to record the profit from, I'm going to record the profit that is coming from the bar right there. So the receipts from debtors will not be part of that. Okay, raffle receipts. Raffle receipts, I have 1.230. Okay, now with raffle receipts, since I have raffle expenses, okay, I have to first get the difference between the 1.230 and the 350, okay, to be able to get the net income that was coming from the raffle receipts. Okay, and then we have the competition receipts. Okay, in the same way, I'll also get this 160 for competition, and then less the competition competition what? The competition expenses. Okay, just to basically, this is a competition. Eh? Like that. So that is what I'll basically do. And then of course, also I'll also have subscriptions. So let me just first copy this. My incomes right there. So donations, I'm recording it the way it is because it doesn't have any additional information. Definitely, if it has any additional information, then you would go ahead and record it. Now, after donations, allow me just record the bar net profit, okay, because it's also another income for the what we record under our income and expenditure, okay, which is 15,970,000. Right there. Okay, and then after I have recorded that, I now go and look at I'm now going to look at the raffle receipts. I think I've told you why I am leaving out the receipts from data. Okay. Look at the raffle receipts.
I am now the new host. but we can bear and wait for Samuel to come online.
Sorry, friends. The internet is to go and sleep. Is 880. Main is, let me just look at what I have in it for competition receipts. Competition receipts. I have 1.6, and then I'm going to less 800,000. I also remain with 800,000. Okay. So competition receipts, the net income from competition receipts, I'll record 800,000. I hope you know how I've gotten that. Okay. So that is what I have. Now, the other income that I want to record is the subscriptions. But subscriptions have additional information to it, okay? One of the additional information we have for subscriptions is this. That means we have also to draw up a subscription account. And the other information that we also have on subscriptions is they are telling us that the subscriptions, 10% of subscriptions received is live subscription, which should be credited systematically to revenue to account for 10 years, okay? So we have to first have a calculation for subscriptions at first. So within my working here, I'll get and say subscriptions. Now, the receipts and payments balance. Under receipts and payments, I have what I have under receipts and payments as provided to me is 10 million, okay? Is 10 million. So I'll record my 10 million right there, okay? So they are telling me that 10% of this is live subscription. And what that would mean, I just get 10% of this and I'll get 1 million, okay? 10% of 10 million is 1 million, okay? So it means that ordinary subscriptions is actually 9 million, the balance, okay? So I have done that. So then I'll go ahead to draw up my subscription account. I'll draw up my subscription account, determine my subscriptions for the year, given the additional information I have, okay? So I'll draw up my subscription account, okay? Now, before I do anything, I'll come and I want to now account for this. Remember what we saw when we are trying to study about subscriptions? They told us about how to account for each of these, but we are just going to use the same principle like the one we used for debtors, wages in arrears, and creditors. So if there are ordinary subscriptions that were received in advance, remember these are liabilities, okay? They are liabilities because ideally, these subscriptions that do not relate to this financial year, they relate to the next financial, okay? So when I'm recording them in my account, T account here, I'm actually going to record them on the credit side, okay? The balance brought down will be recorded on the credit side. So I'll just do like this. So these are subscriptions received in advance. This is a balance brought down, okay? This is a balance brought down. And then if I want to record the balance carried down, okay, which is my subscriptions carried down. I think you know why I'm putting it on the credit side, on the debit side, okay? In this case. So I'm putting it here because in the next financial year, it will be on the debit side, okay? So I put 170 here. For you just know that as long as you know where to put the balance brought down, put the balance carried down on the opposite side. Yeah, like that. So I've put this 120 here and I've put now other balances right here. Now, next that I should be looking at are subscriptions that were received during the period. Now, this subscription account is an income account. And when we receive any subscriptions, these should be credited, okay? We should credit this in our subscription account. So what I'm going to basically do, I'm going to pick that 9 million and go and credit it in my subscriptions account, okay? So I'll come here and record this. I'll call this bank or receipts and payments, okay? Yeah, or cash and bank, whatever it is, okay? So that is what I've recorded. Now, since this account is not balancing, the balancing figure that I will have here will be the subscriptions for the year that I'm going to record under my income and expenditure, okay? My subscriptions for the year that I'm going to record under my income and expenditure will be this side, which the side that has a lower value, okay? So as I add up here, the total of this side is 9.12, okay? And then the total here will be the same total, but in this case, sorry, just in this case, I have a balancing figure here, which is the difference between this and this, which is 8,950. So this 8,950 is what I'm going to take to my income and expenditure to record as subscriptions for the period, as my ordinary subscriptions for the period, okay? So even when you look at that solution, you should be able to see that. And that is how we come to that 8,950,000. So you have to know how to draw up those T accounts. I think you've seen that they are very important, okay? Now, in addition to that, remember they talked of the life subscription component, where they say that part of this were life subscriptions, and then down here, there's a comment they put. They said 10% of the subscriptions received is life subscription, which should be credited systematically to the revenue account for a period of 10 years. Now, since we are already in year one, okay, remember these subscriptions were received in this year. So part of what we just calculated here, part of this 1 million should be recognized this year, okay? Part of the subscription should be recognized this year. Now, remember when we are trying to look at life subscription, what we said, how we account for life subscription. Every time we make a transfer, we should debit our life subscription account and credit the income and expenditure account, okay? So the component of this year should be, of course, what we can do, let's open up our life subscription account. I'm going to open up my life subscription account, and then you see what happens. Life subscription account. Okay. Now, remember, I got a 1 million as 10%. So this, you can call it receipts and payments, or cash and bank, or bank. Okay. This is 1 million. Okay. Remember, it's a liability. That is why we credit it. Okay. Now we are saying that every year we should debit a portion that is to be recognized in your income and expenditure account. Okay. So in this year, we shall have income and expenditure. We are going to take, remember, this 1 million is for 10 years. So basically, every year you should basically get the 1 million divided by 10 is what you recognize every year. Okay. Which is 100,000. Okay. Which you debit. So it means that closing balance for your subscriptions, the closing balance for your subscriptions, when you balance off here, the 1 million and 100,000, of course, will be 900,000. Okay. At least you know to balance off. So what I would just take to my income and expenditure account for life subscription will be only the 100,000 that relates to this financial year. Okay. So when I go to my my income and expenditure here, I'll come and say life subscription. I'll record the 100,000. Okay. Yeah, you can name your workings here. Maybe this could be, let's say, my working for. Okay. And then you come and say here, you refer any figure that you've just calculated under your workings, make sure that you refer them. Okay. Maybe this could be working 3. I've just not been naming them, but it's something that I usually do when I'm done with the question. So you too should make sure that you do, so that you're referring the examiner to wherever you've written those figures. Okay. So that is what we have done for the incomes. Now yours is just to confirm that you don't have any other income that you've left out. Because in the receipts and payments, at least we've recorded everything. Of course, incomes don't be on the credit side. That's why I've not even looked at the credit side. I've taken into consideration this information, and I only found something to do with incomes. Okay. Only to do with ordinary subscriptions. In this other additional information, I only took this part. These others really relate to expenses. Okay. So if that is all that I have for incomes, I'll then go ahead to get my total incomes. I'll get my total incomes. Okay. So when you sum up all this information, you should be able to get 100,000, okay, as your income. Now, the other we're now going to look at is expenditures. Okay. We are going to look at expenditure or expenses. Okay. Now, the expenses that we look at in the income and expenditure are only expenses that relate to the general non-for-profit. Okay. And most of the information we shall get it from our receipts and payments, depending on the question anyway. Sometimes they may not bring you the receipts and payments. Okay. But right here, we have our stationery. I will leave out the bar wages because I already used the bar wages in the trading account. Okay. So I'm going to look at stationery. Which is 200,000, which is 200,000 is what I'll take the other side. Stationery. I'm recording my expenses there. I'll come here. Competition expenses, I already used this when I was trying to get the net competition money from competition. So I will not pick that. I have repairs. Now, is it repairs? I have 2 million. But there was a comment on repairs here, which they said that repairs is an item of development expenditure which should be capitalized. So I'll not include it as an expenditure. I'll include this in my balance sheet, okay? So repairs, I'll leave that out, okay? Intentionally. Then raffle expenses, I already used this when I was calculating the net money from raffles. Payment to bar creditors, I already used this in the when I was determining the bar profit. So what I would just pick next is transport costs, okay? The next that I'll pick is transport costs. The transport costs. Then the next that I'll pick is electricity. Now, electricity had an additional information, and one of the additional information we had of electricity was half of the electricity related to the bar. So half of the electricity, which is 50%, relates to the bar. So the 600,000 basically, okay? So electricity here, this is 600,000. Okay. So main is to just look at and see, do I have any other expense? Now I look through my additional information. The other expense definitely I have, okay, is the depreciation, okay? Depreciation of buildings and equipment, okay? Now, they have told us that the club depreciates all its fixed assets on 10% of on cost, with the exception of equipment. So buildings are depreciated at 20%. So I'm just going to calculate this from here. So 10% of the buildings, that is 2 million, okay? So I'm going to come here and just say, depreciation, building, it is 2 million, okay? 10% of the 20 million that they have given us is 2 million. Make sure that you create a working for it right here, so you can get that mark. Don't just calculate things out of mind like I've done. You have to make sure that you show the examiner where you're getting any answers that you have, okay? Then equipment, the value is at 6 million, but remember equipment, they have told us that it's at reducing balance. Now, what this helps us is that they have already given us the net book value of equipment. Now, in case they had given us cost, okay, would go and get the costs less accumulated depreciation to get the net book value, and would subject the 5%. Remember, reducing balance is on net book value. So they have actually given us the net book value already, okay? So 5% of 6 million is about is it about 300,000? Yeah, around there, okay? It's about 300,000. So I'll just come here, depreciation equipment. Multiplied by 6 million. Okay, so that is what I have. I've recorded electricity. Any other expense? Remember the bar wages, those we already calculated them. Okay, those we already calculated them when we are trying to calculate the profit the other side. So if that is all that we have, ours is to find the total. Okay, the total of this, if at all we've written everything. which we are getting as 35. This is 355, just to confirm, 200, 250, 600. The buildings, this is let me just confirm that this to me for the building here, right? Shortly, what was the value of the building? The building is 10 million, so 10% of it should it's revalued at, okay, 10% at cost should be basically 2 million shillings. Okay, so right there I have 2 million. Now, one of the other things that we also need to think about is, remember they said the repairs is an item of development expenditure which should be capitalized. So we should capitalize the repairs. We should capitalize the repairs here, which is 2 million, and depreciate them. Okay, so I've just realized that is something I'd left out before I even add up here. Okay, so we have another depreciation here of the capitalized repairs. The capitalized, this is research and development. Okay, as we are going to include it under our assets, we should also depreciate it here. And they said all assets are depreciated at 10%. So the depreciation of 10% of the 2 million, which is its value, would be 200,000. Okay, would be 200,000. So in total here, this will be 3550. Okay, and I'll now get the difference. Remember, they told us that for non-for-profit, we don't have a profit, but we have what we call excess of income of expenditure in case we have a profit. Okay, in case we have the difference is positive. Okay, so we have excess of income over expenditure, which is 28 minus that, which is 24 million. Can also be called surplus. Okay, somebody can call it surplus. Okay, yeah, so something like that. So that is what we would basically do have. And then let's just conclude with this balance sheet, which would be very simple because you already have the figures, by the way. For it, we are not going to do a lot of calculations. So that's why it's something simple. So this is a balance sheet. As at 31st December 23. Okay. 23, sorry. Okay. I don't know. Okay. So remember, when it comes to this, I'll have my assets. Okay. And I have my non-current assets. I have my non-current assets. I have the building, equipment, a capitalized So we have, of course, we have the buildings, the equipment, and then we have the development expenditure. That information has been provided accordingly. We have it within our information. So I appreciate all those that are still with me here. So I have my buildings, which is 20 million, which is its cost. So this is 20 million. That is the revalued amount, okay? And we have the depreciation, or accumulated depreciation, call it accumulated depreciation, okay? And then we have the new net book value, okay? The net book value. So for depreciation, for buildings, after revaluation, they have only depreciated 1 year, which we've already gotten the 2 million here, okay? So 2 million will be written here. And then the net book value will be definitely the difference, which is this minus this, which gets you 18 million. Then we have equipment. Equipment, as we saw, they gave us they didn't give us the cost, but they gave us the beginning net book value, which is 6 million, which we shall just use, okay, accordingly. So we shall record our 6 million there. 6 million there. And then I'll remove my 300,000, which was the depreciation, okay? And then I'll be able to get, of course, the difference. That minus that, 5.7. Development expenditure also, this is 2 million, as we saw in the receipts and payments. When you remove depreciation, which is 200,000, okay, you should be able to get the difference. That minus that. So those are your non-current assets. We definitely don't have any other that has really been provided to us, okay? So since that is what we have, then we can get our total of this. We can get the total of this, which is 25,500,000, okay? Then we shall just write our current assets very fast. Now, current assets, those are given to us, so they are easier for us to get. Remember, when it came to here, just like the way we did it when we were doing the statement of affairs, stock, we shall take the 160,000. Remember, last we used the ending figures. So we have stock, which is 160,000. These I'll record here directly, since they don't have things to do with depreciation and what. Then I have bad debtors. Now, like I said, when you're drawing up your balance sheet, you don't separate either it is something that relates to say to bar, or it relates to the restaurant. You don't have to really separate those ones, okay? And then one of the other things that I should also record when I come here, definitely these ones I record them under my liabilities. These are the three. But remember, let me just see in the additional information, there is nothing so much to record there, but I'm going to record something here. Now, do you see this balance carried down? This balance carried down, as you can see there, it is your closing balance for cash, okay? Now, if it's a balance carried down, it means in the next period it will be a balance brought down. So this is like a positive balance, okay? In case the balance was on this side, then it will be like you've closed with a bank overdraft, okay? Remember, cash should have a normal debit balance, okay? Now, if you have it at credit balance, it means that in next financial year, it will be a balance brought down. So this balance carried down, as we remember when we are doing a statement of affairs, we took the 2.5 under our current assets. So even right here, I should take this 28 million and record it under my cash or bank, okay? Cash or bank, the 28230, okay? That, and remember, that is the importance of the receipts and payments. It basically also gives us the opening and the closing balance of our cash, okay? So that is what we have. I don't seem to have any current assets, okay? So what I'll just do is I can get my total current assets. Which is a summation of all these, which gets me to 28. So what I have is this one, and I have this one. Then I'll have, what I have is now sum up, get my total assets, which is this plus this, which is 54. So this is what I have as my total assets. So then I'll just do my liabilities very fast. Say equity and liabilities. Now, before even I record my liabilities, remember, at the start of this question, we calculated our accumulated fund. Now, accumulated fund would appear in your last balance sheet, okay? So we calculated our accumulated fund and it was at 28. So it is part of your equity, okay? It will be part of your equity right here. Okay, let me just record them here. This is accumulated fund. Okay, so that is one thing. Then that is my equity. Okay, so liabilities, I don't have long term. Okay, so I only have current liabilities. So I'll just create a heading for them and just pick them the way they are. Remember, I don't have to calculate them. I have them here. So I have bar wages. I have in arrears. I have ordinary subscription received in advance. I have back creditors, and all I'm going to take all only these last figures, the 130, 170, and 240. Okay, and this is what I'm just going to basically do. Pray this PC does not log me out. So this is what I'm going to take. Sorry. So I have 130, 170, and 240. Okay. This information got distorted. Let me just type it manually. Okay. So I have 130. 170 and 240. Okay. 170 and 240. Okay. I have as my current asset. My current liabilities, sorry. Now, one of the other things that we also need to know is remember we have So we've recorded our respective liabilities there. So I'm saying the other liability we should record is the subscription balance after recognize the 100,000. We had a balance carried. Remember, balancing of this account, 1 million.